Good evening, everybody. My name is Clay Arell. I'm a parent here at Cold Spring School. I'm also the president-elect for the foundation here at Cold Spring and a local supporter of the community. After these unfortunate events here in our area, many people that we're associated with have banded together to help each other deal with this tragedy. It is our goal to provide useful information for people dealing with the debris flow that caused by the Thomas Fire and subsequent rain event that hit Montecito 3 weeks ago. Through community involvement and sharing of resources and collective knowledge, we are inspired to make a difference for those who have been greatly impacted. We are a group of locals here to help locals, and hope tonight is a step in a direction of assistance for you and other people that you know. We intend to host several of these events over the next few months and expand the conversation to support what it is that you need assistance with. I am also in conversation with Doss Williams, our local county supervisor, to open up more dialogue about how we can help, especially around the approval processes and getting people back into their homes. Tonight, we are going to focus on what seems to be one of the first major milestones, which is insurance. Many of you here tonight have had some form of damage to your property or personal belongings. Our speakers tonight will be providing information on what to do and how to deal with insurance, what your rights are, and what to watch out for. We will have two speakers come up. I will introduce both of them, and then at the end, we will have a Q&A session. So without further ado, let me bring up our first speaker for the evening, Brian Henson, president of Allen Construction. Allen Construction is a general contractor who has built homes in the Santa Barbara area since 1983. Brian leads a team of over 100 to create beautiful, energy-efficient, healthy living spaces for residents. Following the T and Hezecita fires, the company assisted over 20% of homeowners who suffered losses with their rebuilding and insurance processes. Prior to coming to Allen Construction, Brian worked in both the disaster remediation and insurance industries. He brings that experience here tonight. And here you go, Brian. Thank you.
So I came from the dark side into the light, from the insurance industry to actually helping people rebuild, as opposed to keeping money out of their pockets. Limited time for you guys. I know this is just a start. And so I want to see if I can, to the extent that we can, make sure that when you leave tonight, a primary question that you might have is answered. So I just want to take like 2 minutes. And if you have a question, if there's something you'd really want to know, that you came here, some sparked your interest, that you want to learn, I want to make sure we cover those because I could weave it into what we're talking about. What I'm trying to do is give you some perspective of what we're seeing negotiating with insurance companies after the last disaster fires that went through here, everything that we're doing down south with the Thomas Fire, as well as locally now working with about 10 or 15 people in the mud. And so any questions that you might have to start? Oh, you got one, all right.
If there were to be no firemen and the Thomas Fire would not be put out by community helpers, would it burn more of Santa Barbara or less?
That's a really good question. Thank you for just jumping right in. I appreciate that. And the answer was those firemen were awesome, and they saved hundreds and thousands of houses. Yes, right up front.
Yeah, I'm just curious, how does it deal with FEMA and the insurance? Like, is it worth it to try to do FEMA? I'm so confused on what that whole FEMA thing.
Okay. I'm just going to write that down, FEMA, with a big question mark next to it. We'll get to that for sure.
What if your insurance company is taking a position that it's not covered because it's just a mudslide?
We're going to talk about that one too, because that's the most important question of the night.
Will insurance cover debris removal on personal property?
And when you say personal property, do you mean your person probably has a term in insurance, which is going to be like your clothes and or do you mean just your property?
For the people that had mud, all the debris that's on your land, getting it removed, will insurance cover that?
We'll talk about that for sure. You had one?
Just the process of debris removal itself. It's a lot of debris.
90% of it still hasn't been moved, right?
And I don't know if this is an insurance question, but we live on Olive Mill Road, and when they cleaned Olive Mill Road, it was like a snow plow, and so a bunch of the Olive Mill stuff is on our property, and I've spoken to like 4 agencies, and they're all like, sorry, too bad. But we have before and after pictures, so we know where it was, and all of a sudden there's this huge mound on our property.
So the road debris on your property is what we'll call that. Some of these I'm not going to necessarily have a great answer because a lot of this is so specific to this, but I'll do my best, yeah.
How does the negotiation go with the insurance company? State Farm has told me I am covered. My 1 acre property is under mud and there's no landscaping done. But they said, as they left, we don't cover everything first. So do you have to go back and forth and negotiate it? Or?
So we're going to call that insurance negotiation, yeah.
I'm curious if you'll have an opportunity to talk about public adjusters and your opinions about that process.
Yeah, I can give some perspective on that. Anything else? These are good. It's a good place to start. I'm going to weave some of these in. Tim might be able to talk about some of these as well. So I want to make sure that we can cover as much as like how your policy works. Some people might have a flood and a fire policy. So I just want to show you kind of like the nuts and bolts of this and where to get started. I know you've probably read them. Maybe you haven't. If you have, they're very confusing. I'm going to try to break that down a little bit for you. Maximizing the settlement's really the key. It is a negotiation from the very beginning, but it's one that you can win. And so I want to talk about that and really kind of like how that works and then just an awareness of some of the vocabulary and how this process works. So if we can accomplish that tonight, I'd be very happy. At least give you some perspective on where to start. I'm going to let Tim talk about these a little bit more when he talks, but basically the big question is it covered or is it not covered? And there's a lot of momentum saying that it's going to be covered. The insurance commissioner is saying it should be covered. And if we go to the next slide, the assembly bill that just came out, SB 917, which I don't know is approved yet, but it's introduced. If this goes through, it's basically a California law that says insurance company has to pay for it. So you can kind of pay attention to SB 917 and see how that goes. But that's huge momentum that way with this idea of like the proximate clause, right? The fire caused the flood. And we already have insurance companies saying they're covering it. AIG is covering it, at least one of our clients, AIG, State Farm, that's good to hear. And I know, but it's still a mixed bag. We heard someone today saying that they weren't covered. So that's all not going to get settled tonight. It's not going to be settled tomorrow. It's not going to be settled next week. But it'll work itself out, likely to be covered. Okay, go to the next slide. There's something out there called the California Residential Property Insurance Bill of Rights. California has some special provisions. One is you have a right to get a line item breakdown of the estimate to rebuild. And you're required to get your policy from them if you don't have it. So if you were damaged by the fire, or if you can't get to it because the house is gone or completely covered, they need to give you your policy in full with all the endorsements, which is very, very important that you get all those extra endorsements in there. The older the policies were, you might have actually better coverage than you think. And so all of those endorsements you need to get in your hand so you know what your starting platform is on how to negotiate. If you don't know that, you can't negotiate. It also says that you're not required to hire who they bring to the table. We had one person say that an out-of-town adjuster brought 3 people from like Bakersfield and Temecula, saying that they're going to be less expensive than local people to rebuild. You have a right to hire who you want to hire, not necessarily insurance guys. You go to the next one, please. So I want to run through an example. Your policy, I just want to run through it real quick. You're going to see a couple things. You should get used to the terminology. There's a coverage A in your fire policy. Flood's slightly different. Coverage A is your house. Coverage B is going to be everything but the house, essentially. So anything that's concrete or wood, a detached deck, the spa, the pool, the detached garage, a gazebo, shed, whatever, any driveway, walkways, that's all coverage B, other structures. There's your contents, which is anything that's not bolted to the house. That's inside. It's all the artwork, your furniture, your refrigerator's kind of in that category too. Your stove usually isn't, but there's some nuances there. Then you have a couple other things like that are buried deep in the policy, and they don't show up on your declarations page. So this is going to be a deck page. It's usually going to be right on the front. It's going to break down your coverage, and it's going to give you a total. That's not the real total. So elsewhere in the policy, you might have something called extended coverage, which is usually like 20, 25, or 50%. Basically, the way that works is if you have a coverage A of, round numbers, 500,000, the extended coverage says, look, if you can't rebuild for 500,000, you're going to get another 20% on top of that, right? It's usually a good thing. It's usually really cheap to add that on, but you get a lot out of it. And there's a couple other categories. There's a debris removal category, which is typically 5 or 10% of coverage A, sometimes of coverage B. And then you have a trees and shrubs policy, part of the policy, which is another 5 or 10%, depending. And then you have something called code upgrades or ordinance and law. That's usually 5 or 10%. And so by the time you add all those up, and what I highly recommending is put this into a quick spreadsheet or just write them down, add all those things in, add them all up, write them all down so they're all on one page, and then that is the target for your negotiation. And think of them, the way I like to describe it is think of them as buckets that you want to fill. And each bucket has its own logic to it. So will the insurance company pay for debris removal on your property? They're supposed to pay for debris removal. They're supposed to pay for whatever it costs for debris removal up to, they're giving you, in the scenario that I gave, a 5% or 10% of the coverage A. So if it costs more than that, it comes out of your coverage A. It comes out of your ability to rebuild. So you just have to pay attention to that, right? If you have an older house, if you had an older house, or if you had one that needs to be brought to current code, and you say you have 10% of a $500,000 policy, so you got $50,000 for code upgrades. If it costs $60,000 for code upgrades, that extra $10,000 needs to come from the coverage A. So you see how that works? So like they're not paying typically for the full whatever it costs, they're paying up to the limits. And so what you want to do is make sure nothing's going in coverage A that could be in the code upgrades, because you want to maximize the code upgrades, fill that bucket, and then move on to the next bucket. And so debris removal, the way that we understand it, the way that it is we're talking with people, covers removing all the debris, which in this case is going to be mud, rock, branches, whatever else might be there. The contents bucket is usually really large, and depending upon what, and it's almost the easiest one to get. The insurance companies are going to want to start you off having you itemize everything. That's a lot of work. How do you itemize everything that you had in your house? And so I would start by pushing back and say, we lost everything, so just pay us the whole amount and don't make us go through this exercise. In some cases in Ventura, they're doing that. They're not doing it in every case. So if they're making you do that and you can't win on that, push back again and just keep pushing back. And if you can't get them to say that, then think of it as a really high-paying job. And carve out 40 hours in the next month and realize if you divide that by your contents coverage, realize you're going to be making like $1,000 to $2,000 an hour. And it's totally worth it if you put it into that perspective. It's a lot of work. But the more that you itemize, the better the payout's going to be if they're forcing you to do that. But push back because I know that they're paying out just full contents for other people. So what you do with that is up to you. What you do with your coverage A, the other structures, the code upgrades, may not be up to you. If you have a mortgage on your house, you can't just go spend all of that. The lender is involved. They want to make sure that they can build back what you had. So you need to let them know what's going on and keep them apprised of what's going on. Especially when you get into the point a couple months from now of potentially being able to rebuild. They're going to need to see those contracts. They're going to need to understand what the plan is. So just know that the content side can be used for whatever you want. What we saw in the Hazasita and T fires, a lot of people were underinsured, and they ended up using a lot of that money to pay for construction to get what they needed to get on the house rebuilding side. You have a quick question?
Yeah, on A, B, or C, you didn't mention her landscaping question.
Thank you. There's usually a separate call out for 5 or 10%, sometimes 15 for landscaping. And you have to read that section carefully because they usually say 5%, but not more than $500 or $1,000 per one tree. And so you need to itemize everything that you had. Yep.
So when you say 10% of, say, bucket A.
Yeah.
Is that of the total limit, or what actually is being paid out in?
Of the total limit. Yeah, not what they end up paying, what the total limit is.
Okay, good.
So some policies are structured where actually the extended coverage applies to all the different coverages. So like if you have a 20% extended coverage, it actually applies to coverage B as well as A. Most of them only apply to A. And so, and most of the time when you're talking about that 5 or 10% for ordinance and law, code upgrades, debris removal, landscaping, it doesn't apply to the extended coverage. It's the baseline coverage A. So that's why it's really important to write all those down, know what your targets are. So I think we talked about these two. Let me skip down to this real quick, the process of debris removal, because this is really important. If you have a flood policy or or not, or the fire policy, the debris section should kick in. You just got to know what's different about the fire policies were not structured to deal with this. It's great that if they can apply, it was not meant to deal. There's nothing that I know of was meant to deal with this, right? So when a house burns down and there's a 3,000 or 4,000 square foot house burns down, it costs $30,000 to clean it up. This is a completely different story if you have 4 feet of mud across your whole property that needs to get cleaned up. And so, there's no great place to drop that mud off. We're being told it's like $1,000 to $1,500 per truckload because they have to haul it a long way away. And so the cleanup is going to be a lot more than what most people have. And so the important thing is for you to structure what's important. Getting to the house, assessing what might need to happen on the house, and securing the house is my recommendation first. And then everything else comes later, to the extent that you can. When you hire somebody to help with this, you're on the hook for that, regardless of what insurance does or does not do. So be careful when you hire someone to start this process. They should work with you in the insurance company. Like the way that we're working with people is like, look, we're really trying to help them. But at the end of the day, we don't know what the payouts are going to be, and the homeowners don't. So just make sure you're not getting ahead of yourself, because you can get ahead of yourself really quickly and start eroding your coverage A really quickly. The mud's got to go. It has to go, but how and when? We're being told from everyone that we're talking to, because we're in the midst of this right now with our entire team, it's going to be harder later. It's still manageable now because it hasn't turned into solidified, but you guys have seen it. That top layer is like rock. And so it's easier to manipulate now, so there's some advantage to that. I'm just trying to communicate most of your policies aren't enough on the debris removal side. I'm sorry to bear that bad news. You're going to have to dip into the coverage A, but just be aware of that. And so you don't want to erode that whole coverage A just to clean up, if that's the only options that are out there for you. So you can do this by, there's a bunch of excavation companies. They're still really busy right now with everything that Caltrans and everybody else has going on. So you can attack this in a bunch of different ways. Just make sure you know what the contract says and how that's going to get paid for. We're recommending, if you're concerned about how it's going to get paid for, that you don't start until you know for sure. The road debris on your property, I don't really know how to answer that. I want to find out because there's a lot of people on that boat. What I've heard is like, is what you have heard. Well, kind of like a cold shoulder to that. So I'm hoping that can change and that the county, maybe flood control, and others can actually step in and deal with some of that. If you had before and after pictures, that's the best situation you can be in. So keep pushing on that with them. It's worth it because you're talking about tens of thousands of dollars at the end of the day to get that out.
If they've gone above and beyond what's necessary for the benefit of the public, you might consider filing a claim with the county or Caltrans or whoever the authority is. There's a 180-day time period in which to do that, and so make sure if you don't file the claim, you're out of luck. And so although the insurance company might help you out, you might get some help as far as the governmental agencies are concerned, and don't think that they're going to be benevolent, so you got to protect yourself with a claim that's filed.
Thanks. It's good to have an attorney right here. I want to shift with the time that I have left to the insurance negotiation side and give a couple tips of what we've seen. The world that we typically operate in is usually black and white. When you go to a store, there's the price, that's what it costs, that's what you pay for. We don't normally negotiate in our daily lives. Pretend you're in Baja, because you're about ready to like negotiate everything. The first estimate that you'll get back is never correct. On the adjuster's side and the estimator, whoever they hired, a lot of these guys are building these estimates and they live in Oklahoma. You'll see it on the report that they give back, and you're going to get this 40 to 60 page computer generated itemized breakdown of an estimate that's a bunch of gibberish. I used to write those things and read them, and it's tough for a contractor or an architect even to make sense of that sometimes. They're never right. They're not intended to be right. So just know that that's not it. You're not done when they send that out. And so from their perspective, they don't know what you had either, right? So they can't build it right. You need to help them build that. So if you have $800,000 and they come back with $600,000, just be like, great, that was a good starting point. We're 6/8 of the way there. Let's get the other 200, right? And just keep that attitude about it, and you'll go a long way. Most of the time, the adjusters are pretty good people. Most of the time, you got to think a life of an adjuster really is horrible. Most of the time, people are just yelling at them. And so they got into this job, most of them, because they really wanted to help people, and they believed in the company that they're working for. And so that they can be your best friend, but they should not be your only friend. And so one of the things that we're always saying, I probably have it on the next slide, is you got to build a team. You have to have some people that can speak that language, that can help you round those things out. And so when you start thinking about how do you get from that 600 to 800 scenario, the biggest thing out there is what did they leave out? What's missing, right? And so I look at it in three ways on item C, right? So we're trying to fill up each one of those buckets, and we try to fill those buckets by first looking at what's missing. So they create itemized breakdowns. If they forgot to put in a new roof, that's the big ticket item. You don't care if it's 500 square feet too small. You want to start to make sure you got the roof, right? Next from there, once you figured out what's missing, is did they have the quantities right? Is it 500 square feet too small? Because if it's 500 square feet too small, the easy correction is like, no, it actually was 500 square feet bigger. Oh, okay, let me change that. And then from there, we have to get past the Oklahoma pricing versus Santa Barbara pricing. And the reality is guys, the economy was booming. The construction economy was booming before this happened. There was a shortage of labor before this happened. And we had seen subcontractor rates, plumbers, electricians, roofers, those types of guys, tile guys, their rates have gone up like 20, 25% in the last 2 years. And so while we think from what we see in the landscape, the general contractors are quite competitive, and we really haven't raised our rates in the last 3 or 4, the subcontractors really have. And so it was a competitive environment before. You can't settle for Oklahoma pricing if you haven't tapped out your policy. So that's the last thing to go after, and that's the hardest. You have to have someone on your team to really help with that, because you actually need to supply subcontractor bids. And the subcontractor community and contractor community is going to get burnt out on this really quick, just supplying insurance estimates. They got burnt out on the T and Hayes Aceta fire. So there's a real strategy about how you go about this and you don't burn people out. You need to get it set up right so that they're doing it once for you, not twice. And so by the time you do it twice, they're on to the next. So I just want to caution that. It's nothing to be overly concerned about, because most people are going to hit their policy limits by figuring out the omissions and the quantities. An example would be, I helped a friend of mine in the Redwood Complex fire. He lives up above Ukiah. We got the estimate. I did this. I sat down with him for an hour. We found omissions and quantities, raised his payout by 25%. Got about a $200,000 with working with him like an hour and a half in a half-hour call with the adjuster. The adjuster thanked us for making his job easy, and hit policy limits, done. So don't be discouraged if what you get isn't the full thing. You'll get it. I think one of the other keys to understanding how an insurance adjuster worked is every 10th one of their policies gets audited. And so if you can give them a reason on why something is ridiculous in their estimate and they can't wrap their head around what it is you may have had, you got to give them something to put in their file that says, well, this is what they had. And so I was with an adjuster yesterday. It was in a fire damage from the Thomas fire. The cabinets had to go. And he's like, well, can you give me something that says on letterhead that the cabinets need to go? And I'm like, yes, I can do that. He's like, good, because I just need something for my file. He's like, I kind of agree with you, but I can't just say yes. And so that's what I mean by negotiation. It seems a little silly, but you can't get there without an advocate that can, so in certain cases, we're bringing a tile guy in to say, look, you can't clean this tile. It's porous limestone. That smoke's not going to come out. That mud is not going to come out. One thing to know about what happened here, and this is AIG's perspective, and another, we're working with someone who had 2 inches of mud come in their house. Full coverage of 2 inches everywhere. It was a raised foundation, come up through the bottom and up. The way that insurance companies look at that is that's sewage if it comes from the outside. If a pipe breaks from the inside, it's a pipe break, it's water. It turns into sewage after 3 or 4 days of sitting there. It turns black. It's automatically considered black water when it's from the outside in. It has all kinds of fecal material and bacteria and all that kind of stuff. So to the extent that it got touched anything that's porous, you can't clean it. It needs to go. You guys can make the decision on how far you go with that, but it's not, these things go farther than you might think. So even if you had 4 inches of mud in your place, the damage is a lot farther than you think, especially because it's been sitting now and it's going to sit longer. There's mold in the walls. And so almost all the time, even if you had 4 inches of mud, all the drywall is coming out, down to the studs. Studs get cleaned and sealed, and then you build back. You have to be careful with that because the reality might be that you don't have enough to pay for everything to be built back. So you need to do this intelligently with some people that can help you understand what those prices are and what it's going to take to rebuild. It sounds daunting. I'm not here to scare you with that. I'm just want you to proceed in an informed way. Can you go to the last slide, please? And then I'm going to hand it over. Well, all of that was really heavy, and I didn't even get to all the heavy stuff. But you just can't give up because it's too big of a deal, and you got to think of it as it's not an adventure that you signed up for at all. No, you didn't want to rebuild or deal with this, but if you don't, you're just going to lose. If you give up, if you don't fight this, you're not going to get as much. Local people want to help. Almost everybody that I've seen, and there's a lot of groups of architects and builders and attorneys and people wanting to help. They will all talk to you and not charge you, right? So just call people that you know who know, just ask. The community realizes it could have been me, right? It could have been Tim. It could have been any one of us, could have happened to us, and we want to help. And that's the sentiment that I hear from everybody that's involved in a way that knows how this works. So don't be afraid to ask, and don't be afraid to ask multiple people. Find someone that you can trust, that you can work with, that can help you through this process. That's what I mean by building the team early. When you go to rebuild, if you're in a position of potentially being underinsured, you can't just blindly move forward with that. You need to have that costing up front, and we're really recommending that if you're talking to a builder right now, you need to get the architect involved so you can get all the information about planning and permitting and all the engineering help. If you're talking with an architect, get the builder on board so you can get real-time pricing. Build that team. You might need a public adjuster, depending upon the skill of your team. I want to shift and talk about this just real quick. Most of the time, if you're close, you can get there without a public adjuster. Public adjusters you have to pay, and they take quite a bit of money. If you have a big gap in what you're insured for and what your insurance is paying, then these guys, that's what they do. animals. I've worked with some of them, and they are hired guns, and that might be who you need. It's probably, I would never recommend right out the gate with these guys. If your insurance company is being good to you, they're talking to you, they're indicating that they want to help, they don't like this process at all, right? Because it goes adversarial really quickly. If it's not adversarial, I'm just recommending in the beginning, don't make it adversarial. If it gets to that point, this is where you go, because these guys know the ins and outs. Most of the time what we're seeing is people are close enough with a little bit of help from a contractor who can understand their estimates. You can get to that end, and it's going to go faster and more amicable and be less stressful for you. If you can't get there with your local people, boom, that's who you can go to. They're out there, public adjusters or attorneys. Lastly, I'm just going to say this is buckle down. This is not and should not be something that you feel you have to rush and make mistakes. You can go as fast as you want to go, and the more energy you put into it, the faster it will go, but it is not something that you have to rush. You have, most cases, additional living expenses, one of those things I didn't talk about. Most of the time that's 2 years. I think some of you have 1 year unless it's declared a disaster area, which I'm sure if it hasn't now, it will be. It has, so you have 2 years, even if it says 1. The number doesn't double, but you can basically take that number, divide it by 24, and that's what your monthly spend can be, essentially. And know that no matter if your house had 3 or 4 feet of mud in it, you need to get it, know it, is it structurally damaged or not. Even if it's not structurally damaged, by the time you get through insurance negotiation, get it cleaned up, and start the rebuild process. That's a year sort of minimum to go through that. If there's more damage than that structurally, it's going to take 18 months, potentially even up to the 24. So, man, I feel like I'm bringing bad news, but just prepare for that and don't rush through it, because you don't want to sell yourself short on that settlement. Okay. Good?
Keep it strong.
I teed him up for that.
Hi, I'm Tim Bynack, and I'm with a law firm of Bynack, Favre, Archibald, and Spray. We're 13 attorneys here in Santa Barbara. And besides being the managing partner, I'm also very much practicing, and we're involved in real estate, land use, and tax and business and things like that. So, and we've been involved with insurance disputes and litigation and the like. We have quite a team. And as Brian was saying, it's important to have a team, and I can tell you that, we had people on our staff that were affected, it's kind of like knew half of the people that passed on. And, it's like, if not directly, it's a cousin of the person that was working for me, and, she passed on, and her daughter, et cetera. So it's very unnerving to me and to the people at my firm. We have a call-in. We have a legal alert that's here, and we have Nick Behrman, who's one of our attorneys that is taking calls having to do with this area and other areas. And we have land use people like Olivia Marr that's sitting in the back here that was out of her house for how long? Just got back in 2 or 3 days ago. And so, we experienced that. And so we're familiar with the fire and with the flood. And so what's happened in our discussion here is that you've jumped real quick from, fire coverage here into coverage having to do with the mudslide. And that's based upon what this gentleman was talking about when he was told that he's not covered. So what has happened legally is that the courts have come up with, they've been very favorable over the past few years, very favorable to people that are victims of mudslides, and they have carved out through the insurance code efficient proximate cause. You're going to hear that you're going to hear important cause, and if you have a fire policy, why does that have to do anything with the flood? Well, the issue has been resolved back in, I think, 1990. There was a California Supreme Court case, and basically said that if it's the efficient proximate cause, that the fire that caused the flooding, that it will be covered through your fire insurance policy. So when carriers are dancing around this particular issue, it's not going to go anyplace. And I was told earlier this week, and there was an article in the Independent, having to do with State Farm, saying that they're going to cover everything as far as the flood is concerned underneath their fire policies. And that's because they're one of the bigger insurers in California, and they've lost like 2 big cases, having to do with this exact issue. And so we've had as you'll see in the handout, we had a local case having to do with the La Jesuita fire that was tried in the U.S. District Court here in Los Angeles, and the carrier lost that case also. So this is, there's a lot of discussion, but please realize that your fire policies apply, and as Brian is saying, when you go through the policy, you're going to see all these exclusions having to do with water, okay? So you just have to realize that those exclusions do not apply in conjunction with your situation. The courts have ruled that particular way. So if you have this peril that is coming that causes the flooding, that they're not going to allow the fire policy exclusions having to do with water apply. And so you're on firm ground legally, and I guess I'm saying, I hope you don't get to that particular point. And as Brian is saying, it is a negotiation. The first thing that you have to do is understand your policy thoroughly and get your ducks in line and do all the things that Brian is talking about, on the ground in terms of putting it all together. And then if you need a little push, you're going to try to get over, with maybe this public adjuster or with an attorney. When it gets to the attorney stage, we're met with attorneys, at the carriers, and then we're arguing at that particular point. It's not the best situation. Maybe I'm working myself out of a job, but the thing about it is that, going through the court system is not the best thing, because in the case that I just referred to in the U.S. District Court, the case went all the way through U.S. District Court. I'm sure there was over $250,000 worth of attorney's fees on each side that had to do with that case. It was tried also on the basis not only coverage, but on bad faith on the part of that particular insurance carrier. The judge went through all the analysis, and if you've ever been involved in federal court proceedings, it's just a federal court proceeding. And so the result was $32,973 or something like that, covering for the damage for the problems with the foundation at the house. So, you have to realize what the reward is in terms of going through that particular process. That's why I encourage my clients to, try to work through the negotiating stage after you figured out, exactly what your coverages are, and you have the backup that's necessary to persuade the adjusters that you're working with at that time. Now, getting back to efficient proximate cause, besides the case law, and the carriers currently, we understand that Chubb is doing a really good job in terms of taking care of their insureds in this particular area, and State Farm seems to follow in that particular, way. Legislation was introduced. The Senate bill was introduced by Senator Hannah Beth Jackson from the local area. And what she's trying to do is just take, you can see the information in the cases that I put together, and work them into the insurance code. The insurance code has some language in it, and I won't bother you with the code sections and the like, but it has some terminology in there that says, well, maybe it's not covered. And the courts and the Supreme Court in the Howell case said we're not going to buy that as far as the insurance code is concerned, and we're going to let the fire policy cover for the, the flood, the mudslides that occurred in that particular case. But that doesn't mean that every court is going to follow that. So legislation basically attempts to do is put in statute the court decision, so there's no changes for anybody, and her bill is one paragraph long. It's not very long, and it says it's a codification of existing law, and that is an effort on her part to say, we're enacting it now, but it's not an ex post facto law, meaning, somebody should not be governed by a future law based on past circumstances. So I feel real comfortable in terms of those of you that had flood damage should all be covered through your fire policies. Those of you who have flood policies, we were talking about this a bit, that should be added to your fire coverage also, but there's very few people that I run across that have flood insurance in this particular area. It's along the creeks and places like that. Besides, I know State Farm, the maximum they were covering was $250,000 on any kind of flood damage. So you paid for one contract in fire insurance, pay for one contract as far as flood insurance. If you can combine those two together, you can get a bit more than what you have as far as the fire insurance coverage is concerned. I think that's all that I have. I just wanted to make sure that you're going through the right trough in terms of all of this here. And like I say, the rebuilding process, Olivia works on, our stuff as far as land use is concerned, and, T-Fire people are still rebuilding their houses, and we were supposed to have an expedited process to go through these fires, and I don't see it happening. So this is a plea that you talk with your people on the Board of Supervisors of the city to say that the planning and zoning should work with the professionals that have a expedited process and to get you up and running so that you're not 1, 2, 3, 4, 5 years out and you're still struggling in life, with this particular, situation. Just like to get the community going again, and like I say, if you need assistance, feel free to call us, call the attorneys, and the numbers are over there. There's a copy of the bill that Hannah Beth put through. That doesn't mean it's been enacted. That's just with the Senate. It goes through a bunch of committees, and then finally it gets up to the legislature for a vote, and then goes over to the governor's office. But that's my, yes, sir.
Is it possible to get a class action among people who are insured by one company where they've taken the position that it's just not covered?
It is, and when you get involved in class action lawsuits, you have to realize that you're giving your rights up, to the class in terms of putting all of that together. And there's like 2 class action lawsuits, Tom Foley's firm and Capella's law firm, are doing those, and there's more coming on board. You're gonna, sign up just like you are any consumer. You've gotten something having to do with a class action lawsuit, maybe with your automobile and the like. So yes, it is possible, but those go on for years, and you're going to get your little bit, at the end of the whole thing. So we're representing people on an individual basis. We elected not to go to the class action approach because we feel that for our clients we can be of service individually to them in a better way than donating, having them go for the whole class. But the answer is yes, and perhaps some law firms are willing to do that, but when you do that, you're giving up your rights and they're going over into the class, and those have to be all kind of like the same issue that is going through. I guess one thing that wasn't as legal, that wasn't mentioned, is make sure when you're signing off on releases, and getting money, that you read those and possibly go see an attorney of what rights you're signing off at that particular point in time, because that's how the process is done. You're getting a check, and you know that's the end of the day. You can't get the check and say, well, I signed this release, and geez, I forgot to mention something, and you know, go back at that particular point in time. That's just a tough road to go. That's about it.
Thank you, Tim and Brian, very much. We were going to give some time to do some Q&A if anybody has more questions. We maybe give them about 10 minutes or so to go through some extra questions that have come up, and then we can kind of complete the night. So if anybody has any questions burning, we'll go ahead and take some.
Yeah, my question was around what you just said at the last statement, which was when you receive a settlement check and you're signing off potentially the liability, what are the steps that you should take to make sure that you're fully satisfied?
Well, number one, that you've evaluated everything that you think that you're covered for, and you got your team to take a look at it. You know, possibly somebody like Brian, you know, possibly somebody that's knowledgeable, you know, in the insurance area. And if you're happy with that the language as far as the release is consistent with what your understanding is. And I would say have some attorney take a look at it, because all releases aren't the same. And until you get to specific wording, you know, it's going to have wording that usually says that a certain code section is waived, and that code section is like 1541 of the CCP, Code of Civil Procedure.
Right. So what I'm concerned about is you didn't think of something, right? And then later on you realize, oh my gosh, I wish I'd thought of my chimneys needing to be cleaned or something like that. Is there a way to allow for further extension of the claim?
There is, but the code section I just told you says that if I know or I don't know it, that it's released. And so that's what the carriers are going to be pushing, you know, onto you. And so if you want to, you know, to reverse that process and say, I'm releasing you based upon the information that we've discussed, you have to redo that lease and turn it around the other way, instead of, you know, I know they're going to have that kind of language in the releases. And people just sign them, oh, I'm getting, you know, X hundreds of thousands of dollars or millions of dollars, and all of a sudden, you know, they're happy, and then they say, well, I just left so much on the table, but, you know, now the chimney is cracking or something like that, and I didn't know that was going to happen.
Right. Is there, I don't know, maybe this goes to the other gentleman. Brian? Is there a comprehensive kind of list of check items that you should be considering when you're filing a claim with your carrier? You know, say, yeah, here's the things you need to look at: your gutters, you need to look at your heating, your insulation, all those types of things, so that you can go, man, you know, I didn't think about that. You know, I didn't realize that underneath my rugs are, you know, padding that might need to be replaced, that type of thing.
Yeah, so I would say one thing on the payment, you're going to get multiple payments. And they're going to, what's good about the insurance companies, they're going to, if they haven't already, you're going to start getting checks. Here's $20,000 for contents. You need to buy new clothes. Here's $150,000. We know that you need to start hiring an architect or engineer or somebody to start doing evaluation. That shouldn't happen out of pocket. That'll start to flow. What I would tell people is every time you get that, you follow it up in writing that says, thank you. We don't agree that this is the full limit, though, but we appreciate this first step, right? So that you're acknowledging. At some point towards the end, they're going to give you something to sign. And what we tell people is not until you know everything has been checked by somebody who understands building and construction. And in a lot of cases, you might even want to have like an industrial hygienist come in to make sure that there's no more bacteria or mold. And so most of these will need a test out. I'm highly recommending that you have that now in there. You don't need to test it to see if it's there. It's there. And so once you've gotten cleared from rebuilding what you need to rebuild, from architects, engineers, contractors to inspect, and you have the hygienist sign off on it, and you've gotten everything that your policy limits can pay for, that's when we say, go ahead and sign.
Okay, thank you. Very informative.
Maybe that's a good project that you should undertake, because I haven't seen such a long list like that. But, you know, I see all kinds of lists and charts that people put together. But, you know, when you get down to construction and land and landscaping, et cetera, somebody could start building that. It might be 100 pages long, but it might be helpful.
My insurance company, USAA, is taking the position that it's not covered, but they said, we had some ash come in from the fire. So they said, well, we'll cover that. It strikes me that they could say, all right, we've settled the fire for the ash, and that included the mud as well, not treating it as two claims, but trying to sneak in basically, well, we covered the fire, and if this was fire and you settled for the ash cleanup, you settled for the mud as well.
I think USAA is coming around. They actually have I was reading one of these on the weekend. They have a very specific clause that I don't think the other insurance companies have. There's a very specific clause on page like 15. So I was just reading this. I might be wrong on that exact page number, but it basically states none of this applies to mud or flood unless that mud or flood is caused by a fire. I mean, it says, it's the only one that I've read that actually says that in there. Oh. So I think that they're going to come around, but read that policy front to back and you'll find exactly what I'm talking about. It says it in there twice. Page 15? I think so, because I was just reading this weekend for a USAA policy. If you want to give me your contact information, I can send that to you.
Thank you.
Yeah.
I've not yet read my policy, but you described the relocation provision in a way that I hadn't really considered it. You said something like, look at the total dollar amount that's there and divide it by 24, and that's your kind of monthly spend. And can you describe that more clearly? In other words, I sort of felt that we have a lot of food expense when we first move out, or and have access to food, we're eating in restaurants. I figured that after 2 weeks, they're going to say that goes away. And now that I can get to my house, I probably don't need to buy any clothes anymore. Maybe you can help me understand how that really works.
Yeah, good question, because I did gloss over that. This is something you're all dealing with. So that was a crude way of kind of figuring out what your rent could be, because you're going to have a bunch of upfront things that go into that category that will erode that a little bit more. So the policies are almost all the same with this, where they say they're going to pay for your living expenses to your current standard of living. So if you had a 5-bedroom house with a view, you shouldn't accept a 2-bedroom house that doesn't have what you had, right? So just based upon expense. Now availability is a different thing, but the insurance company can't cheap out. You should not really care what it costs. The only thing that you should care about is it going to run out? And so what I encourage people to do is kind of do that math. Find something that's equal to what you had. You might need to rent furniture if it's not furnished, or buy furniture if it's not furnished. That all fits into that category. And so the clothes and whatnot comes not from that category. It comes from the contents category. But the additional living expense, I've seen some people get into like a 6-month lease because they had nowhere else to go. And it's not what they wanted. They're driving now 30 miles farther than they used to. That's not the same standard of living. You didn't have a commute before if you have one now because that's what you rented. The insurance companies you shouldn't care if you have to break that lease and what it costs. You should just care of when it's going to run out and base that monthly rent of the new place on that time frame. Is ultimately what I was trying to say. But no, you've got these furnish it and do some other things to make it work. Does that make sense?
So that, for furnishing it, they have to either provide a rental furniture or you can buy and furnish it.
Comes out of that category though.
So that doesn't come out of one of the buckets?
That's additional living expense, yeah.
And that's a time thing, it's not a price thing?
It's a time thing, and there's a dollar figure attached to it. If you don't use it, you don't get to keep it. That's kind of one of the ones that are like that. If you don't use it, you don't get to keep it.
But
So
it's really pretty much rent and furnishing.
rent and furnishings is what that's for.
So if you had, for instance, you were only out of in a mandatory evacuation area for a few days, but you had to sign a month lease because that was the only thing that was available, and how is that treated?
I think you could argue you'd have a deductible question there. Is it worth it if you're hitting the deductible? I haven't seen that, so I think if it's like, look, there was nowhere to go, all the hotels were full, you had to live somewhere, you had to work, your kids got to go to school, you could probably make a good argument that, and you didn't know when you could move back, so you had to do it.
Right, and then the issue of water supply, I was talking to my agent, and they said that was one of the reasons that you were considered not having a livable home, if your water supply wasn't adequate.
Yeah, if you can't move, if the house wasn't what it was, which would include water supply or power, and you had to stay somewhere else, that would be in that additional living expense. You should probably make a claim if you haven't already.
Thank you.
There are sections of the code having to do with habitable buildings in the rental area, and you could use that particular language as to what's necessary, to have a habitable building.
Is there a limitations period for filing claims if they've denied coverage?
It's 4 years as a breach of contract.
4 years, okay.
But you have bad faith, you have the bad faith claim as far as the company is concerned, so I'd recommend filing in 2 years.
Brian, could you please speak to this question, and that is, are homeowners in the mud flow area eligible for small business loans? Small business loan administration?
Yeah, good question. I know that these are available for people up in the Redwood Complex and the fire in Santa Rosa, where the SBA is offering really low interest loans, like 1.7%, something like that. Up to $200,000 is what we've heard. I haven't seen that apply here, but I'm assuming that it will. Thomas Fire, yes. Yeah. So my guess is it'll be here too.
I filed for a small business loan, and they're processing the application.
Great. Good.
So
Awesome.
if you go down to the assistance center, they're really
Great.
helpful. They'll fill out the application for you right away. I got a call the next day
Great.
About processing, and then I got a call 2 days later, and they're further processing it.
That's really good to hear, because what we saw in the T and Hazasita fire is like that much made all the difference. $200,000 was the difference between like having to compromise on a smaller house and not the features that they want to getting what they want. That last $200,000 on a house is everything. It's the finishes, and it's what makes it great, because there's all these sunk costs with the engineering, with the soils and the concrete and all this stuff that you can't change, and you can't build a house without that. And so that last $200,000 is the most $200,000. So if there's something available, and it's easy to sign up, and there might not be a commitment for it, you might want to start looking at that if you're in that position.
Yeah, what it is, it's basically a line of credit. And you draw down when you need it, and they make the funds available to you. It covers uninsured losses to the extent that your insurance company covers it, then they reimburse Small Business Administration. The other thing is the deadline for filing currently is March 16th.
So, Olivia, did you have something to add?
If you fill out the FEMA application online and you indicate in that application that there's been any impact on your business or your income or anything related, then they'll immediately refer you to a small business loan, and so you'll get an email right away where you can apply.
Along those lines with the FEMA, I'm so confused with the difference between FEMA and your insurance company. And they say all the time, there's no double dipping, no double dipping. And I'm like, I'm not trying to double dip. I just don't understand what the difference is and why you would even need FEMA if you have homeowners insurance, should they decide to cover it.
I'm a little out of my comfort zone there, because we just haven't had to deal with folks working with FEMA. I'd say that might be the only alternative for some reason your insurance company isn't playing, and you get into something that's going to go on forever. But most of the time your insurance company is going to, from what I understand, is going to have more money and better availability. That's my understanding, but I'm a little bit out of my wheelhouse.
So, Olivia, is that your understanding of it?
Yeah, I believe it's potentially secondary. So like, say you have a renter's policy and you have 2 weeks of loss of use, and that's all you get paid out, and you end up being out of your home for a month and a half, and potentially FEMA will provide you with some additional assistance. But they won't pay you for both. You can't get, $5 grand and another $5 grand
FEMA will pay first and then get reimbursed from the insurance.
Yeah, sometimes if they find out that you made a claim with your insurance. I know people that have applied with FEMA and they've already gotten money deposited in their account, so.
Urge anybody who can to go down and at least register for a FEMA claim and put a small business administration application in. You'll be surprised at how responsive they are. And if you don't need it, you don't use it.
I just wanted to mention that the Assistance Center is open at the Calvary Church through this Saturday, and then it's supposed to be moved to a new location in Montecito. Has that location been identified? I don't know. Okay. Yeah. So on Monday the 5th, there will be a Assistance Center within the confines of Montecito.
There's also an organization called WEVA or Weave or something that is the Women Economic Ventures, and apparently they're offering even more than the SBA loans. And it's not just for women, it's for any economic losses associated with the fire and mudslide.
Do you just want to say special thanks to Clay and his team for organizing all this? He kind of did that without any fanfare, so thank you, Clay.
Thank you. So we're going to conclude the evening. I want to take a couple moments to thank some people as well. So you beat me to the punch. I definitely wanted to thank some of the people who helped put this event on. Beneflex was a big supporter, and West Coast Financial, and of course Mentality here doing the production work. We hope to get this out and out to other people as soon as possible. AB Design Studio, who's here in support, as well as Allen Construction and Tim Bynek's firm as well. And I want to give a special thanks to Karen in the back, who did a lot of the setup work and really did a lot of the background organizing of this. I got the ability to stand up here and look foolish, but she really did a lot of the work, and I really appreciate that, Karen, so thank you very much. I also want to thank Dr. Alzina. She's the superintendent principal of Cold Springs School. She made this possible as well, gave us the space to do this event, and we hope that it was worth your while. That's it for tonight. I know we'll be around if people want to come talk to us individually for any reason. I really want to thank you for being here. We appreciate your time and your attention. It was a great conversation, and we look forward to doing these again and helping everybody in the community. So, Montecito strong.